Hello everyone, I'm back with another video. Today I'm going to answer one of your questions. Somebody asked me about trading on the momentums, okay, like this. Like for example, going with each and every single candle in the direction of the momentum. I'll go for the next one. Okay, so in trading momentums, we're basically going with the trend, okay, with the momentum. Okay, going against the momentum is always not suggested. Okay, never go against the momentum because the possibility of winning a trade, it's so low compared to going with the momentum, even without any analysis. Okay, so normally I personally don't take momentum trade because in my point of view they're kind of blind trades. For example, this one, okay, and whenever I try to go with the momentum, the candle that I took the trade goes green, for example, and the rest of them all red. I don't know why that happens, but for me personally, I don't like going with the momentum in the direction of the momentum without any setup, okay? But in order to get better results, you can just check the past and see if it's any support here or not, okay? If there's not any support, let me just draw this. Draw all the support and resistance nearby and then see if it's closing any support on any support or anything, okay, then don't go against it. For example, this one, it closed right on the support, but I took this because I hadn't checked that, and this is a doji, okay. Let me see, we're probably gonna be able to take this doji trade if we range a little bit, and then this creates us a ranging market, then we can trust this doji. If it's gonna start uptrend from here, it's kind of a swing doji, and we cannot trust that. Okay, so I hope I answered your questions. Going with the momentum like this in the direction of the momentum can give you some good profit, but in some cases you're gonna just lose your mind because you go with the momentum. For example, you take this candle, all the candles are red, but only this one is green, and it messes your mind. Okay, I just prefer to trade my setups. For example, here we have a doji trade. I would like to have a red green pattern, and then this doji breaks, I go with the in the direction opposite of the breakout. Okay, let's see, it's breaking, but we haven't really a range here. What I mean by range is something like this, or some like some sort of range or base, okay, from different colors. You see, these are some bases. So I need a base here in order to trust this doji. All right. Let's see if we have other opportunities. Okay, we have another one here, but it's not a really good doji because it has some body on it. I'll take this trade just because it's combined with this round number, and also we have this gap up, and this is a supply area. That's why I took this. Let me just go with the, okay, this is the doji I was waiting for to be broken, but it didn't give me the range I wanted, so this is kind of high risk for me. So we have two running trades right now. This one is not a very beautiful doji, but this is a pattern. It's needing retracement. So pattern retracement, gap up in the favor of sellers. Okay, when you see gap up in these kind of momentums, this is the gap up. It's in the favor of sellers. If you see gap down, it's in the favor of buyers. And that's another reason. Another one, this break of this spinning candle. Okay, I would not say it's a doji. And another one, we have a supply area here. So we had 4 reasons to take that, and this one here is also a doji. Okay, this one was a losing trade, and the other one was a winning trade. That was kind of surprising for me because it was down till the last seconds, but then they pushed it up. Okay, so minor trend, uptrend. The next resistance is going to be up here. Okay, I'll go with the buyers if it comes a little more because I'm expecting another green candle here. My best entry would be down here, okay, because this is the place in the market. You could see that the market was deciding to this candle be a red one, but at the last second they change the decision and they go up. Okay, you should monitor the candle's movement. So here there should be something happening here. So this area here You see these 2 wicks? This area here should be my point of interest for them to enter again. So if the price would come down, I would enter here for sure. Okay, so this is minor uptrend, and that was a winning trade. Okay, that was a very good opportunity for taking common point of rejection trades, you can see. And this is a base here as well. You can see that, you know, red, green, red, red, you know, the candles are just red, green patterns, and you can kind of see the sequence of them. Okay, this one is having a gap up, that's why I didn't take this as a buy, but it was a takeable buy because we have sequence. You see, this is the 3rd time we see double red candle in this base, bigger base. But because of this gap up, I didn't take this, because gap up can change the result of your trade. This is ABC to the downside, but you can see this supply has been consumed 1 time. So here it's weaker than normal. So I will just take this with 50. Okay, I will take this with 50 because it's a ABC break here. But since it has been consumed and it counts as a high risk setup, I go with 50 here. Okay, just in case if we lose the trade, it's not gonna hurt us. Okay, this is a common point of rejection. You see it's rejecting from. This is a common point of rejection. When we have a lot of rejection, we draw the common point of them, and it becomes our common point of rejection. So we can take the trade if we have set up. For example, this pattern engulfing, it can have a retracement. Okay, so going with the sellers here is our preference before even seeing this common point. So then we add the common point of rejection as a confirmation to this you know, setup. So first you have to have your setup. My $50 trade was a winning trade. You can see that we have ABC break, gap up here as well, and major downtrend, I would say, but the minor trend is uptrend. Okay, let me just see if we have a good trade here. Okay, oh my god, look at this. This space is going forever. I'll just go with the sellers here. Let me just go 250 here. I go 250. Okay, because this is clearly a red green pattern. Okay, red green pattern, and maybe we could enter here as a common, like I said before, this is a common point of rejection. You see, common point of rejection added up to the red green pattern, and then the bigger picture also is a range, so you have to combine everything. Okay, and there's a point about my trading style. When I already have my today's profit, I don't go full amount anymore. Okay, I was about to take this with 200, but I was like, bro, I already hit my take profit. I don't want to mess my mindset. I don't want to you know, lose my winning streak. So I'm just gonna lower the risk and be happy with my trades. Okay, this is how it works. Please work on yourself, work on your mindset, and see how works better for you. Okay, just minimize your risk. Yeah, I think that's enough for today, everybody. I hope you enjoyed. If you did, drop a like for me. Don't forget to check the Forex channel. I will have Forex University very soon. Thank you for all your supports. Peace out.